And now the third method of the recognition of the asset is disposal by exchange. But please remember that when you exchange the assets, you cannot just get the new asset for the old asset. You have to pay additional amount of money because the new asset has better functionality than the old asset. So here we will consider two steps. First of all, sale of asset of the old asset, and then purchase of the new asset. So you will use some of the money from the sale of the old asset to buy the new asset. So first of all, we purchase equipment for 81,000 plus a trade on the old office equipment. So we add some money to purchase new equipment. For the old equipment, the carrying amount, the book value is 26,000, cost minus accumulated depreciation. And the market price, the market value of old equipment is 10,000. That one we will use to determine whether we have gain or loss on sale of the old equipment. So step one, look at the sale. Cost 70,000 minus accumulated depreciation. The book value is 26,000. The cash proceeds, the fair value of the old equipment, is only 10,000. So you get less cash than the book value. Clearly, the difference between 26 and 10,000 would be 16,000, the loss on disposal. So the entry here would be you get cash 10,000, you remove accumulated depreciation of 44,000, you recognize the loss as if it is expense 16,000, the difference between book value and proceeds, and you remove the old asset from your asset register 70,000. So this is your entry. Alternatively, you can, as I said before, you can have two steps here. First of all, remove accumulated depreciation against the asset. So debit accumulated depreciation 44,000, credit equipment 44,000. And the second step, debit cash 10,000, debit loss 16,000, and credit equipment 26,000, which is your book value. And when you combine step 1 and step 2, you will get this type of combined entry. So that's regarding the sale. The next step is purchase of new equipment. So we purchase new equipment for 81,000 plus some additional amount because it is a new equipment, it is more expensive. This additional amount comes from the sale of the old equipment, and that's why it's not 81,000, it's 81,000 plus 10,000, 91,000. So these two steps, sale and purchase, can of course be combined into this long entry, but it's up to you. And then you can perform the same calculation. Now the fair value is not 10,000. Now the fair value, the cash proceeds, are 35,000. So cost minus accumulated depreciation is book value 26,000, but the cash proceeds are bigger than the book value, so you have gain on sale. And you prepare this entry for the sale of the asset. The gain will of course be credited, will go into credit, 9,000. Again, here you can have two steps. First of all, the debit accumulated depreciation, 44,000 against credit equipment, 44,000, and then debit cash, 35, credit gain on disposal, 9, and credit equipment, the book value, 26. The second step is as before. It is not affected by the fair value of the old asset because now we talk about new asset, and you can combine step 1 and step 2 as usual. That's it, what you need to know about the disposal of the assets, the three methods of it. Thank you.